In this video, I'm going to be going over exactly how much dividend income I made in the month of June from a $180,000 account, and I'm happy to announce this was my largest month of dividend income ever. And to break this down, we're going to be jumping into my do-it-yourself investor toolkit. We'll be looking at things like my investment dashboard. We're going to be looking at my dividend dashboard, my dividend calendar, my daily dividend calendar, and like always, we're going to be projecting what my portfolio will look like in the future to see how long it will take me to achieve my long-term goal of one day being able to live off dividend income. And like always, if you'd like to be able to download this spreadsheet or any of my other spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. I'd also like to say thank you to Seeking Alpha for sponsoring this video, but more on that later. So let's go ahead and start breaking this down. Now, if we zoom in, we can actually see the first milestone that I hit this month is my portfolio value for the first time ever just touched $180,000. So I'm getting pretty close to that $200,000 mark. And as of right now, of that $180,000, close to around $39,000 of that is purely from gains. For some reason, there's a huge misconception that if you're a dividend investor, a lot of the times you don't see capital appreciation from your investments. But if you're a long-term dividend growth investor and you focus on buying quality stocks that can grow their free cash flow, grow their earnings, you're going to see a lot of capital appreciation along with growing dividend payments, and that's exactly what has happened with my personal dividend portfolio. Now, if we keep moving and come down here, we can see my allocation as of right now. My cash position is currently sitting at about 9.5%. I'm sitting on about $19,000 of cash, so I have about 90.5% of my portfolio allocated to stocks. So typically, I pretty consistently contribute new capital to my portfolio every single month, but I also like to be ready for opportunities when they present themselves. Now, if we scroll down a little bit further, we can see the total holdings in my portfolio is currently sitting at about 30, and ideally long term, I'd like to get this a bit lower. And for example, if we come over here, let's look at my cost and market value chart. You can see basically this is showing the cost I've put into each of these positions versus their current market value. So for example, we can see SCHD, market value is a decent bit higher than the cost. But when I look at these positions, I have to make sure they align with my long-term goal of one day being able to live off dividend income. I need to buy high quality companies that can grow their dividend payments for the foreseeable future, and ideally they should be pretty high conviction plays. So to be honest, a few of the companies that are currently on the chopping block, we have KHC, this is a very small position in my portfolio, SJM, and then we also have INTC. These are positions that will probably be removed in the future. But a lot of the other positions in my portfolio are actually positions I'm very excited about, and I've actually seen pretty phenomenal gains so far. If we jump over to my growth chart right here, we can see things are looking pretty good for a lot of these positions, and currently my biggest winner is AVGO Broadcom. I'm up over 216% on this position. If we look at my position in JP Morgan, I'm up over 92%. Microsoft up close to 70%. And I have quite a few other positions right at the 50% mark. We can see Bank of America 49, Domino's Pizza, a very underrated quality dividend growth stock. I'm up 57.45%. Jefferies Financial 65%. Apple 52%, Waste Management nearly 38%, and plenty of other big winners as well, such as Visa and Texas Instruments. So there are plenty of winners in my portfolio as of right now, but of course there are a couple of losers as well. Like I said, INTC, a company that's probably on the chopping block. I'm currently down about 16.81% on this position. We have Vici Properties. This is a company I'm super excited to hold in my portfolio, but I'm only up about 3.83% on this position, and REITs are really struggling right now. We can also see my position in Realty Income, currently down by about 3%. But again, these are companies that I am perfectly comfortable holding right now. They're operating in a high interest rate environment, which undoubtedly hurts real estate investment trust, but they're still growing their AFFO. So if the share price is going down, adjusted funds from operations is going up, and those dividend payments are growing, really I think this presents opportunity, especially when we see interest rates go down. So again, I haven't seen great gains from these positions, but I'm super excited to keep holding them and to keep reinvesting my dividends back into those. Now, before we jump over to my dividend metrics, I want to quickly show you my portfolio allocation. You can see a big portion of my portfolio is currently allocated to SCHD, the Dividend Growth ETF, and this is an ETF that actually paid out its largest dividend payment ever this month, and I'm going to touch on that here in just a minute. But other than that, we can see my next largest position is Microsoft. It makes up about 8.1% of my portfolio. It's sitting at about $14,570 of value. Again, when people think of Microsoft, they don't necessarily think of dividends, but this is a company that has the potential to really grow its dividend payments for a long time in the foreseeable future and really grow them at a pretty high rate. And of course, when a company is growing its free cash flow, they're able to easily grow their dividends, and as a byproduct of both of those things, the share price is going to appreciate over time as well. But other than these positions, we can see the portfolio is fairly well diversified from an individual standpoint. Now, if we keep scrolling down, we can see my allocation by industry. Now, right now, I don't have SCHD broken out other than just stating ETF, but other than that, we can see technology, largest portion of my portfolio, sitting at about 16%. Real estate around 6.7. We have financial services at 7.8. Consumer cyclical about 8.3. Come up here, we can see healthcare at 4%. Consumer defensive at 4.8%. And if we come down here, industrials at about 3.7%. So let's go ahead and zoom out. And now we're ready to jump over to my dividend dashboard to see exactly how much dividend income I made in the month of June. And like I said, it was my highest month of dividend income ever. So let's go ahead and check this out. This is something I'm very excited about. This was a milestone month for me. So let's go ahead and zoom in and break this down. And what we'll be able to see when we come down here and look at my historical monthly dividend income. In the month of June, I made $1,108.17 in dividend income. Again, my highest month ever. My previous high was pretty high, sitting at about $934.25. So when we look at where I started and where I've been going over the past few months, there's a clear trend that we're seeing. The dividend snowball effect is really starting to take off. Now, if you're new to dividend investing or you're just not very familiar with it, you're probably looking at a couple of these months. Let's look at last month, for example. You're seeing $165 and thinking, okay, his portfolio value at the time was sitting close to around $175,000. And in the month of May, he only made $165. This doesn't seem like a very good trade-off. And at first glance, you're right. So why is this? Well, you have to understand there's a big difference in dividend investing versus dividend growth investing. Typically, people who call themselves dividend investors purely look for companies that pay out big dividend payments. These are companies with high starting dividend yields of 7 or even 8%. But personally, I'm a dividend growth investor. I look for companies that can rapidly increase the amount they pay out in dividends year after year. Now, why is the reason for that? If the long-term goal is to live off dividends, why am I choosing companies with lower yield that can grow their dividend payouts at a high rate? And this is something I talk about pretty frequently on the channel because it's pretty misunderstood by most people. If we go over to a new sheet, we can see two different charts that are modeling out the amount you would get paid out in dividends from a dividend growth stock versus a high yielding dividend stock. And the yellow chart is showing us if we do reinvest dividends, and the orange chart is showing us if we don't reinvest dividends. So let's go ahead and start out, assume we are reinvesting dividends. Let's blow this chart up just a little bit more. So the red line is showing us dividend growth stocks, and the blue line is showing us high yielding stocks. And if we look closely right here, what we can see, starting out, high yielding investments are obviously going to be paying us more in dividend income, but dividend growth stocks over time actually pay out more in dividends. Now, why is this? Again, this is because dividend growth stocks increase the amount they pay out in dividends every single year at a high rate, so eventually they pass those high yielding investments. So long term, dividend growth stocks actually pay more. Now, this is reinvesting dividends. What if we don't reinvest dividends over this time period? And we can see the results are actually pretty staggering. If we don't reinvest dividends, high yielding dividend stocks really don't increase the amount they pay out in dividends very much over time. But dividend growth stocks, even if we don't reinvest dividends, still continue to increase their dividend payouts at a high rate. And this is pretty important, especially if you're hoping to live off dividends one day, because at the point you start living off dividend payments, you no longer reinvest those dividends. So if you want to beat inflation, you need to have stocks that are still increasing the amount they pay out in dividends. If they're not increasing their dividend payouts, eventually inflation will catch up to you and your monthly cost of living will surpass your monthly dividend payments, meaning you could no longer live off dividends. Pretty scary to think about because it's a mistake a lot of people make. Now, I don't want to spend too much more time on this dividend growth versus high yield debate, but quickly look at the total value comparison. Dividend growth really outperforms from a total value standpoint, whether you reinvest dividends or don't reinvest dividends. Now, why is this? If we jump over to my stock screener spreadsheet, let's look at a very quick example. We'll come up here and plug in LOW and hit enter, and we can see all the data will load in thanks to the help of the ticker data add-on in Google Sheets. Now, Lowe's has historically been a great dividend growth stock, but we can see the starting dividend yield for the company is sitting at just 2%. But if we jump over to Seeking Alpha and look at the long-term performance of this company over the past 10 years, they've really outperformed the market, up by about 357%. Now, why are they up by so much? Well, it's pretty obvious. We can see top lines, revenue per share, have really grown, but the bottom lines like earnings per share and free cash flow per share have really grown as well over the past decade. And so if we jump over to the dividend breakdown sheet and plug in LOW and hit enter, what we can see from Lowe's dividend history is they have rapidly increased the amount they pay out in dividends. So while seeing a lot of share price appreciation, they're also rapidly increasing their dividend payouts at a 10-year dividend growth rate of 18.82%. So here's what you need to remember. Dividend growth and share price appreciation are a byproduct of earnings per share growth and free cash flow per share growth. So when you're looking for quality dividend growth stocks, that's what you want to look for, and you're going to see a lot of share price appreciation in dividend growth as a result. It doesn't have to be just one or the other. Now, if we go back over to my portfolio tracker, let's go ahead and zoom back in and start breaking this down again. We can see my expected yearly dividend income is now sitting at $5,705.89. I'm getting closer and closer to $6,000 a year in dividend income, and we can see my average monthly dividends now sitting at $475.49. And something I want to talk about for just a moment is my projected annual dividend income. Let's blow this up just a little bit and go ahead and zoom in a little bit more. We can see this has grown pretty rapidly over the past few years. If we look at where I was last month, my projected annual dividend income was sitting at $5,511, and if we look at it this month, it's now sitting at $5,705. So this jumped up by almost $200 in the span of 1 month. But here's what's crazy about this. This comes mainly from reinvesting dividends and my holdings increasing their dividend payouts. For example, I saw a massive dividend payout from SCHD, the largest position in my portfolio, the Dividend Growth ETF. I reinvested that dividend, but that dividend ETF also announced a huge dividend increase. So because of this, I saw a huge increase in my projected annual dividend income from doing absolutely nothing. All I had to do was reinvest dividends and let my holdings increase their dividend payouts. So we have to understand markets can be volatile. They can go up and down quite a bit any given year. But my projected annual dividend income is constantly growing regardless of market conditions because I hold dividend growth stocks that increase their dividend payouts and I reinvest dividends. If we come up here, let's look at my dividend income by industry. Now, a lot of people don't track this, but this is actually pretty important if you're a dividend investor or dividend growth investor because you want to make sure not all of your dividend income is coming from any one place. A lot of times people make the mistake of buying 10, 15, or even 20 different dividend stocks, but they're all very similar in the industry that they operate in, so there's still a lot of risk when it comes to those holdings, especially if your dividend income is mainly coming from one specific industry. But you can see for the most part, my dividend income is pretty fairly diversified. For example, we can see real estate makes up about 12.4% of my dividend income, but if you look at my investment dashboard, we can see real estate only makes up about 6.7% of my total portfolio. So it's important to make that distinction and understand why that's important. Here on this chart, we can see my dividend yield on cost. Keep in mind, positions like SCHD, I have a dividend yield on cost of 4.07%, which is quite a bit higher than the current yield for the company, and that's because they increased their dividend payouts. The same is true for my holding in AVGO. If we go over to Seeking Alpha and look at AVGO, what you're going to see is the starting yield is actually pretty low. It's sitting at about 1.31%. But because I bought at a great valuation and this company also rapidly increases their dividend payouts, we can see that I have a yield on cost of over 4%. And then finally, if we come over here, we can see my dividend income by stock. I have a few big payers like MO and Altria Group, but for the most part, it's fairly well diversified other than my big position in SCHD. And after reinvesting my dividend back into SCHD and them also increasing their dividend payouts, I now get paid around $3,100 every year from my SCHD position. That's pretty cool. So the next thing I want to do is jump over to my dividend calendar. But first, I want to say thank you to our sponsor, Seeking Alpha. Seeking Alpha is one of my favorite investment research platforms because they make the data that you want to see so easily available. Obviously, we're looking at the home page. We can see a lot of key metrics right here. We can dig into the financial statements like the income statement, balance sheet, statement of cash flows, and also get access to prior and upcoming earnings reports, something that's pretty important to look at. And then of course, I love looking at dividend metrics. They break down things like dividend yield history, dividend growth metrics, dividend safety, and of course, I want to be able to look at the dividend history and make sure the companies I buy are increasing their dividend payouts over time. So there's obviously a lot of great features. We have things like valuation, growth, and then we can chart out performance of different stocks against the S&P 500 and also look at tons of different metrics all in one place. So Seeking Alpha, definitely one of my favorite investment research platforms, and I've been using it for years now. Link in the description if you want to check it out. Okay, so now we are looking at my dividend calendar, and at first glance, it looks like there is a lot going on here, and it may look a little confusing if you've never seen one of these before, but it's actually pretty simple. If we go ahead and zoom in, what we can see here, we have my dividend income by each individual month, dating back to January of 2022, and then we have the total amount of dividend income I received from each position. Those are two great reasons to be using a dividend calendar. But here's the most important reason you should be using a dividend calendar, and this is especially if you're a dividend growth investor or really any type of dividend investor. You can see how your dividend payments are growing over time, and the easiest example that I typically talk about is going to be Realty Income, and the reason behind this is they pay out dividends every single month, and they actually increase their dividend payments on a quarterly basis. So for example, we can see in January of 2022, Realty Income paid me $5.83 in dividend income. The next month it was higher, next month higher, next month higher, next month higher, and you get the point. Every single month, this is increasing. If we look a year later, it's about $8.15, so not a lot of growth, but if we keep moving forward, we can see July of 23, $21.49. Keep moving forward, February of 24, $25.41. And if we look at this most recent month, Realty Income paid me $27.05. So with the dividend calendar, we can see how my dividend payments are growing every single month. So now let's go ahead and break down where my $1,108 came from this month. Which companies paid me dividends. And to start out, we can see we have Johnson & Johnson pay me about $30.82, KHC with a small dividend payment of $1.78, Microsoft around $24, Realty Income $27, SJM $3.44, 3M about $3, Bank of America $21.32, Domino's Pizza, again an underrated dividend stock, $12.33, INTC $2.37, JEPI $9.17, Target at $10, Visa at about $9, one of my favorite dividend growth stocks. We have T. Rowe Price close to $12, AVGO $16.33, and then we have SCHD $890.85, Waste Management $17.25, and then UNH, that's United Health Group, $16.80. And again, we can see this all totaled up to $1,108.17, a huge milestone for me. Now the next thing I want to look at is going to be my daily dividend calendar, and the idea behind this is actually pretty simple, but I think it's a pretty cool way to track dividend income as well. Basically, it tells us exactly what days we were paid dividend and how much we were paid on that specific day. And you can see I've been tracking this for quite a few years now. And just off first glance, what we can see in 2022, the total amount of dividend income I made, sitting at $1,289.24. And now that we're at the end of June of 2024, we can see my 2024 dividends is already more than double what I made in 2022 through just half a year, $2,777.23 compared to 2022's total dividend payments of $1,289. So it's awesome to see this progress and how fast it's all happening. We can also see that SCHD dividend was the highest they have ever had at $890.85. And if we zoom in, we can see some of these big dividend payment days. Let's go ahead and zoom in just a little bit more actually. We can see the 3rd, 4th, and 5th, all decent days, got paid dividends on those days. We can see pretty good days on the 13th and 14th. On the 21st, I got paid a little over $17. 25th was decent, 27th decent. 28th was a pretty good day at about $51.76. And then SCHD technically pays out on July 1st, but this is the Q2 dividend payment. And because June 30th fell on the weekend, they're technically paying out on July 1st. But again, this is a Q2 dividend payment, so I decided to go ahead and list it in the month of June on June 30th, just for the sake of tracking. So lots of really exciting things happened this month, but I still need to answer the question, how close am I to being able to achieve my long-term goal of living off dividend payments? And to answer that, like always, I built out a financial model that should be able to project what my portfolio will look like in the future. If we go ahead and zoom in, we can plug in my starting portfolio size of $180,000. We're going to assume a price growth rate of 7%, a dividend growth rate of 7%, and a starting dividend yield of about 3.5%. And then the long-term goal for monthly contributions is a little bit aggressive, I know, but it's about $2,500. Now keep in mind, when I started dividend investing, I was contributing only about $50 every single month to my portfolio. So regardless of where you're at, it's key to just get started. Now, before we look at how much dividend income I'm going to make in the future, there's something important we have to keep in mind. Again, this is something I talk about on the channel pretty frequently, but I don't see other people talking about this. But it's cost of living. And cost of living, we think we know how much we spend a month. We think we know what our expenses look like on a month-to-month basis. But we have to remember, inflation compounds over time just like any other investment. So what this means is our cost of living every single month, every single year is going to compound over time. And for example, right now, if my monthly cost of living was $4,000, in 30 years, assuming a 2% inflation rate, which is the historical average, I know it's quite a bit higher right now, but this is the historic average. But 30 years from now, our cost of living would be around $7,245. That should be pretty scary to think about. And again, this is another big reason that I'm not as much of a fan of higher yielding investments if you have a long time horizon when it comes to investing, because your cost of living is eventually going to catch up to those big dividend payments. Because high yield stocks typically don't increase their dividend payouts as much. Now, if you want me to really scare you, if we bump up this average inflation to 4%, we could see in just about 20 years our monthly cost of living jumps up to a little over $8,000. So again, pretty scary. So just important to keep in mind, inflation compounds over time as well. But now if we jump over to my live off dividends analysis, again, this is going to tell me how long it will take for me to be able to live off dividends. We can see this black line is my cost of living and my red line is my monthly dividend payments. So the point at which this red line passes the black line is the point at which I could live off dividends forever. So let's go ahead and see exactly how far away I am. We'll come over here and look at the breakdown. Again, we want to see when can I live off dividends, when do my monthly dividend payments surpass my monthly cost of living. If we start scrolling down, we can see it looks like after 5 years, we're still not at that point. Keep scrolling down 10 years, we're still not at that point. And it looks like right here, close to around 15 years is the point at which I should be able to live off dividends, a little bit less than 15 years, because this is the point at which my monthly dividend payments will surpass my monthly cost of living. And here's what's pretty cool. At this point, again, remember, dividend growth investors see a lot of capital appreciation. My account value would jump all the way up to around $1.8 million, and the total amount of dividends I would have received during this time period would be over $416,000. So it takes about 14 years to get monthly dividends up to $5,350, but watch how fast the snowball effect takes place. If we jump forward just half that amount of time to 21 years, look at this. We can see right here, my monthly dividend payments doubles, even though it took half the amount of time. To get to the first $5,000 a month in dividends, it took about 14 years. But to get that up to over $10,000 or even $11,000, it only took 7 more years. That's the snowball effect at place. So if we jump back over to my investment dashboard, we can actually see this broken down in a pretty simple fashion. And right here, we can switch between if we want to see reinvesting dividends or not reinvesting dividends. If we don't reinvest dividends over the next 5 years, we could be making about $15,000 a year in dividends. In 15 years, $44,000, and in 30 years, $150,000. That's still pretty amazing actually. But if I reinvest dividends, it's a totally different story. In 5 years, the yearly dividend payments would be $17,361, 15 years, $66,000, and in 30 years, close to $350,000, well more than double what that not reinvesting dividends number would be. So again, this was a huge milestone month for my portfolio. I hit $180,000 and also had my highest month of dividends ever, which also for the first time ever was over $1,000. Again, it's crazy to think when I first started, I was only contributing $50 every single month to my portfolio. And now I just had a month where I made over $1,000 in dividend income. So keep in mind, if I was only contributing $50 a month to start out, it would take me 2 years to contribute $1,000, but simply by reinvesting my dividend payment this month, I already contributed what it would take me 2 years to do when I first started. That's the power of the snowball effect. The key is to simply get started. Look for companies growing revenue per share, earnings per share, and free cash flow per share. As a byproduct, you'll undoubtedly see share price appreciation, and you'll see phenomenal dividend growth, just like Lowe's has seen over the past decade. Now, like always, if you'd like to be able to download any of the spreadsheets you saw in this video and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Again, also thank you to Seeking Alpha for sponsoring this video. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.